For the past 30 years, the entire global financial system has been running on this kind of hidden engine. It's been a source of incredibly cheap money that's fueled everything from Wall Street trading floors to your local car dealership. But what happens when that engine suddenly, completely seizes up? Well, we're about to dive into a hypothetical, but let's be honest, a chillingly plausible scenario. A financial earthquake that starts in Japan and sends shockwaves across the entire world.
Yeah, this is the perfect way to picture it. For decades, Japan has been that quiet, super stable foundation holding up the whole world economy. It was providing the cheap capital that everyone else was building on top of. But now, in this scenario, you start to hear this terrifying cracking sound coming from the very base of the building.
And this is the number right at the heart of that earthquake. Look, we're not talking about some company going under or even a single bank failing. We're talking about the potential collapse of the Japanese government bond market, a market worth over $7 trillion. That's a number so big it could literally reshape the entire global financial system as we know it.
Right, so that's the big question, isn't it? How did we even get here? How did the country that's famous for stability suddenly become the potential starting point for a global meltdown? To really get it, we got to go back a bit.
For the last 30 years or so, Japan has played this one very specific role in the global economy. It basically became the world's ATM, a place where pretty much anyone could go to get nearly free cash. It all started way back in the 90s. A massive property bubble burst and just crippled Japan's economy. And to fight off this death spiral of falling prices called deflation, the Bank of Japan did something pretty wild. In 1999, it cut interest rates all the way down to zero. So for the next 20-plus years, while the rest of the world was riding these crazy economic roller coasters, Japan just kept its money practically free. And this whole policy created one of the most powerful forces in modern finance, the yen carry trade. Now, the idea itself is actually super simple, but the scale of it, it's just mind-blowing. Think of this like a global money-making machine. It was incredible. An investor, let's say a giant hedge fund in New York, right? They could borrow millions of dollars worth of Japanese yen for next to nothing. Then they'd swap those yen for US dollars and go buy a US government bond that was paying, say, 4% interest. And that 4% difference, that was just pure, almost risk-free profit. Easy money. And look, this wasn't some tiny niche strategy. The yen carry trade grew into a $20 trillion behemoth. No, that is not a typo. $20 trillion. That's a pool of money bigger than the economies of Germany, India, the UK, France, and Italy all put together. The entire world, from governments to stock market speculators, got hooked on this endless river of cheap Japanese money. Okay, so how does this whole thing suddenly catch fire? For years, everything seemed totally fine. But then we fast forward to our hypothetical crisis in January of 2026, where a political shock suddenly lights a match in the bond market.
So here's what happens. A new prime minister comes in and announces this huge spending plan, but she doesn't really say how they're going to pay for it. Then she calls a surprise election, which tells everyone even more borrowing is coming. For investors who are already looking at Japan's sky-high debt, the highest in the developed world, this is the last straw. A government bond auction fails. A failed auction, that's the ultimate vote of no confidence. It's the government saying, hey, we need to borrow money, and pretty much nobody shows up to lend it. And that's when the panic starts.
And this quote just nails the core problem here. A bond revolt is a crisis of confidence. Investors get spooked, so they start demanding higher interest payments to lend the government any money. But of course, those higher payments make the government's debt problem even worse, which just scares investors even more. It's this terrifying, vicious cycle.
And the fallout? It's instant. Bond yields, which are really just the interest rate the government has to pay on its debt, they don't just go up, they explode. We're talking about market moves that used to take months happening in a single day. The calmest, most stable market in the world suddenly becomes the most volatile, and billions of dollars in wealth just vanish overnight.
So, and here's the really crucial part. This chaos does not stay in Tokyo. The tremors from this earthquake immediately spread across the ocean, and they turn into a global tsunami. So the way this happens is through something called capital repatriation. You know all those trillions of dollars that poured out of Japan for decades? Well, suddenly, all that money wants to come rushing back home.
Yeah, this slide shows you the complete 180. For 30 years, the game was simple. Borrow cheap in Japan, invest everywhere else. But now, with Japanese bonds suddenly paying something decent, Japanese investors, who, by the way, are the biggest foreign owners of U.S. debt, they start dumping their U.S. assets to bring that cash home, and that triggers a massive wave of selling in markets all over the world.
So, all of a sudden, the US dollar, the world's reserve currency, it's getting punched from 3 different directions at once. First, you have Japanese investors dumping dollars to buy yen. Second, that big interest rate advantage the US had for so long is shrinking fast. And finally, you have all this new political anxiety making investors wonder if America is really the ultimate safe place for their money anymore.
Okay, so where does all that money run to? Well, when investors are fleeing currencies and government bonds, they run to the classic safe havens. And in this nightmare scenario, you see the prices of things like gold and silver just boom, skyrocket to unbelievable new highs. So you might be thinking, this is all fascinating, high finance stuff, but what does it have to do with me? Well, it turns out a crisis that starts in the Tokyo bond market has everything to do with your wallet, no matter where on earth you live. This is really the single most important thing to get from all this. Think about it. For most of our adult lives, we've lived in a world built on cheap, easy money. It's all we've ever really known. Well, in this scenario, that whole era comes to a sudden, painful stop. And here's what that reset actually looks like in the real world, for you and me. See, when it costs more for governments to borrow money, it costs more for everyone to borrow money. Getting a car loan, a personal loan, a mortgage, it all gets more expensive. Companies start passing their higher borrowing costs onto you as higher prices for everyday stuff. And stock markets? They could take a serious hit as those safer government bonds suddenly start to look a lot more attractive. It's a fundamental change to our entire economic reality.
This quote just sums it all up perfectly. The world economy has been hooked on this drug, this cheap money from Japan, for 3 decades. And getting off that drug, that weaning process, it's never going to be painless.
And that, really, is the huge question this whole scenario leaves us hanging with. Look, whether this exact crisis happens in 2026 or not, the bigger truth is that the age of free money is ending. The foundation is shifting right under our feet. So the only real question left is, are any of us actually ready for the shakeup that's bound to follow?